Because if you had $250 today, you wouldn't want to get in the stock market. You wouldn't be able to buy one share of Apple or Amazon. And if you had 2,000, what do you do? Oh, I got one share of Apple and one share of GE. That's not diversified. In a mutual fund, you just got to meet the minimum investment, maybe $250. It might only be $50 for your IRA. But as soon as you put money in, you're immediately diversified. We have management companies which are open and closed-end funds. And then these days, there are also unit investment trusts. 401ks, you have a choice of mutual funds, which are investment companies. And so you don't pick individual stocks. You just hope that the investment advisors manage the fund better than you would on your own. But then, you say, well, I bought like 8 stocks in this trading account and 7 of them are down. Oh, well, then you're probably the perfect candidate to keep it in mutual funds because you have no business picking stocks. In a 401k, like most folks, you probably are only familiar with mutual funds, which are investment companies. The concept, okay, in the real world, you can think of Janus Funds Distributors. Let's use ABC Funds Distributors, fictitious. Who are we? We're a broker-dealer. We're a member of FINRA. And then as the fund distributors, we'll create all of the marketing materials and we'll do the filings with FINRA. And then if you're smart, you'll use exactly what we give you so that you don't have to refile it. Sales literature, advertising, however they define it now. So we're out to market and push the sale of shares. We're a broker-dealer. Broker-dealers are in the transaction business. We're related to an investment advisor. And so we're pulling in money for them to manage. And they get bonuses for the institutional clients too. They're going to get bonuses here if they match a certain index. Even if they don't get the bonus, they're going to get a percentage of the assets as a management fee. And $300 million for a year on one fund is not unusual at all. So look at the synergy here. The better ABC Capital Management does, the easier it is for ABC Funds Distributors to pull in more assets. If things are going well, they can become just a huge, profitable mutual fund complex because we're making money as we pull the money in. And then because you're doing so well, you're earning huge management fees, which makes it easier for us to pull more money in. We might get so big that we stop taking on new investments because we can only manage, 10 billion or whatever it might be.